Hey guys, welcome back. Hope you like the new wallpaper. I'm going for more of a minimalistic look this month. Anyways, so the story goes, I had all my notes ready and I was readying what I was gonna say and everything. And then you guys know what happened, right? The stock market went. So just to recap what happened today, the S&P 500 dropped 3.5%, the Dow dropped 2.8%, and the Nasdaq dropped almost 5% today. It was an absolute bloodbath. So I had to go back and update all my screenshots. Usually I don't take the effort to update every single screenshot, just if the market moved like 0.5% or something, but today was obviously an exception. Which is why this video is late, and I apologize for that, by the way. But anyways, side note, I was gonna brag to you guys about how my portfolio finally crossed the $50,000 mark. And granted it did for like a day. And then, you know what? If there was a God, he probably saw me writing notes for this video to brag to you guys, and he was like, nope! So anyways, I promised I would show you guys the down days as well as the up days. So I'm going to show you guys how much of a down day it was for me today. And yeah, you guys can see how much gains I've given up today. And you know, also my portfolio dropped below 50K again. So you know what? I'm actually not too beat up about that actually, because I think that it's healthy to have these market corrections from time to time. And if you look at that trailing 12-month return, overall, I can't complain, right? I'm still up massively. Anyways, I'm not going to waste any more time talking about this. I'm sure you guys are excited for part 2 of my portfolio reveal, and I'm excited too. So without further ado, let's jump in. So first of all, before I begin, let me give you guys an update on my Carnival cruise calls. So if you guys recall, about a few months back, I bought some call options on CCL, Carnival Cruise. And you know, if you guys remember, I bought about $1,000 worth of CCL calls. And this morning I closed out my position in CCL calls for about a 40% profit. So I made about $450 from this transaction. So this is US dollars, by the way. So if you guys are Canadian and you're watching and you're used to Canadian currency, it's like a lot more than $450, right? So I'm pretty happy about that position. And you know, I'm not one of those guys that make secret trades and then only tell you about the ones that I make gains on. So obviously I talked about this position when I opened it, right? So if you don't believe me, you can go back and check my previous videos where I talked about buying CCL calls. And obviously at the time when I bought the calls, I didn't think that I was going to be up 40%. Otherwise I would have bought a lot more. But yeah, obviously. Anyways, check out that video if you don't believe me. Links down in the description. So I'm actually pretty happy about closing out this position today because I closed out this morning where it was at a good price. And you know, CCL was one of the only stocks I could see in the entire stock market that was green today, which was nice. Anyway, so that's that. I'm out of CCL completely. I don't have any positions in CCL now. I don't have any more calls, and I don't have shares either. So maybe if the stock goes down a bit more and goes back down to like $15 per share or something, I consider buying back into calls or something. But for now, I'm completely out of Carnival Cruise. Anyways, so that's that. Now let's move on to the actual portfolio review. So first up on the list is Revolve, ticker symbol RVLV. Now I have 129 shares at a cost basis of $19.72, and we're currently up about 8% on this position. Now for those of you who don't know where Revolve is, basically this online clothing company, and they sell primarily to millennials and Gen Z, and also in particular is mainly geared towards women. I mean, they have some men's clothes as well, but it's really mainly geared towards women, and face it, the customer base is like 90% female anyways, right? It's like the exact opposite of the channel analytics on this channel. So I know like 96% or something crazy like that of the audience of this channel is male. So yeah, it's quite the opposite of that when it comes to the customer base of Revolve. Now I think Revolve is interesting because of their rather unique approach to marketing and promotion. So mainly they use social media platforms like Instagram, and they use influencers to sort of raise awareness of their brand and get their brand out. So I think that this has massive potential because if you just think about where the attention these days is at, it's on social media, right? It's on like platforms like Instagram, and recently there's been a big debate about TikTok and whether or not they're going to sell to Microsoft. We'll still have to see about that. But anyways, the point is social media has so much power over our lives now. And you know, these days, if you run an ad on TV, who's going to see it, right? No one watches TV anymore unless it's like a Super Bowl commercial or something. But, you know, aside from that, TV ads are pretty much dead these days, right? So I can't even remember the last time I legitimately watched TV. Like I watched TV on a TV, like I mean like a cable like TV subscription, right? I don't mean like a TV show on Netflix or something like that. Anyways, as well as marketing, Revolve is trying to use their algorithms to find out what types of products will be popular so that they can pick and choose what types of products will sell well and order more of the ones that will sell well and then retire all the ones that don't sell well, right? So, you know, if you order too much stuff, especially in the fashion industry, everything moves so fast, right? If you order too much stuff, inventory is going to sit for a long time, and for fashion, you really don't want that inventory to sit for a really long time. It's like it depreciates faster than ice cream on a hot day. But at the same time, you don't want to order too little, because if you order too little, then customers are going to get mad because that thing that's super popular is going to run out of stock instantly, right? So you also don't want to order too little, and also if you order too little and you sell out, then you don't make as much money as you could have, right? So we have an indication that whatever management is doing at Revolve, it's working, because on their latest earnings report, they adjusted EPS actually went up. And this is despite of the Roni situation that's going on right now. And they reported an EPS of 20 cents per share, which Wall Street was only expecting 2 cents a share. So this is absolutely massive. And yeah, their algorithms, what I said about the algorithms earlier, does it actually help with inventory? Well, inventory turnover was actually 30% faster than what it was the same quarter a year ago, which is absolutely amazing. Now, Wall Street is expecting the company to grow revenues of around 20% in 2021, but I think that if they do well, they can actually beat that as well. Now, in my opinion, Revolve is one of the companies that truly understand the mind of the millennial and the Gen Z, and this is tremendously valuable in my opinion. Now, let me tell you a story of what could happen of when a company doesn't understand the mind of the millennial and the Gen Z. This is sort of a counter example to what I was talking about. So, you know, I was at the grocery store recently and I saw these sausages that were made by Maple Leaf Foods. Now, if you don't know what Maple Leaf Foods are, maybe you're American. Maple Leaf Foods is basically like the Tyson Foods of Canada, right? So if you're American, just think of Tyson Foods as one of the biggest like name brand food producers here in Canada, and they mainly produce like meat products and stuff like that. Anyways, look at this picture and tell me what's wrong with it, all right? So it's 50% meat and it's 50% plant-based. Like, what? Like, who is this for, right? To me, this just seems like Maple Leaf Food didn't actually understand why people are switching to plant-based foods in the first place. And to me, this just seems like a lame attempt to kind of pander to millennials and pander to the Gen Z, because the executives saw how high Beyond Meat stock went. And yeah, I wonder how that pitch meeting went when they originally pitched the idea for this product. So, you have a business idea for me? Yes, sir, I do. You know, I noticed that people my age are obsessed with plant-based meats. Plant-based meats? What's that? Well, sir, as the name suggests, it's meats that taste and feel like real meat, but it's actually made from plants. Plants, huh? You mean that silly thing that I have sitting on my windowsill that I've never watered in my life before? Well, kind of, but I was more thinking of industrial scale produced soybeans. Why would I make food out of soybeans? Why would I eat the food that my food eats? Well, sir, people are buying it up left and right. There's this company called Beyond Meat, and ever since they IPO'd, their stock has just gone through the roof. We could make a lot of money from this. I like money. Yes, sir, so do I, which is why we gotta get into this market right now. Okay, I get what you're saying, but here's a problem. We don't know how to make plant-based meats. That's not a problem, sir. I know how. Well, don't just sit there. Tell me how. Okay, well, first you gotta start with some soy. Okay, go on. You have to get the mixture of plant proteins just right. Continue, you're on a roll. And then forget the steps. And then we add meat to it. Brilliant. Absolutely brilliant. Anyways, you might think that that's a bit of a far-fetched example, but in my mind it makes sense. Anyways, that's Revolve. So next stock on the list is Berkshire Hathaway, ticker symbol BRKB. Now this is the Class B share because obviously I can't afford the Class A. It's like, what, $300,000 a share or something like that. I didn't even check the price. But I own 15 shares of Berkshire Hathaway B at a cost basis of $212.18 per share, and we're up about 4.5% right now. And this one's definitely a long-term hold for me. Berkshire Hathaway, if you didn't know, that's Warren Buffett's company. And basically they own a bunch of different companies and brands. And they also have a very significant stake in a lot of other famous companies, most notably Apple, which they own like 5% of, I believe. And also, I'll put up a list of different companies that Berkshire has a significant stake in, and you can see that sorted by dollar amount. This is not an exhaustive list, by the way. We're not going to even try to go through the entire list because there's just way too many holdings. But yeah, you can see it sorted by dollar amount from largest to least, and you can see that there's a bunch of different types of companies in all types of sectors. So you can think of Berkshire Hathaway stock as sort of just an ETF. but like a glorified ETF where you have Warren Buffett as your manager picking the stocks for you, and you're also diversifying your money when you buy Berkshire Hathaway stocks. So yeah, by owning Berkshire Hathaway stock, you're indirectly owning a bunch of different companies, and you have one of the world's greatest investors behind you. So why would you not buy Berkshire Hathaway? So in my opinion, I really like Berkshire Hathaway stock, and I'm not going to sell it anytime soon. This is definitely a very long-term hold for me. So that's Berkshire Hathaway stock. Now let's move on. The next two I'm going to group together actually, because I'm just going to go through them very quickly because I already made separate videos on those and you guys can check them out later. And of course, I'm talking about Facebook and Microsoft. So I own 20 shares of each stock, and my cost basis on Microsoft is just about $200 exactly. And I'm up about 8.6% at the moment. Now for my Facebook cost basis, I'm at $183.95, and I'm up 60%-ish, almost 60% on this position. Now again, I'm not going to go through my full bullish thesis on Microsoft or Facebook because once again, I already made videos on those, but let me just try to quickly summarize the fastest way I can. And you know, there's a reason why these stocks are so richly valued, right? Even after today's big tech sell-off, they're still very richly valued at the moment. And these companies are basically getting a fantastic business model, a stable business model with a fantastic balance sheet, excellent management. So I think in the long term, it's hard to go wrong with either one of these stocks. If you just bought in now and you just close your eyes, right? Let's say you like fell into a coma for the next 10 years. You bought the stock and you just like went into the coma, and 10 years later you wake up. Do you think that the stock price of Microsoft and Facebook will be higher or lower than what it is now? Chances are, if I were to put money on it, which I do, you would be much higher. So with these two stocks, I'll be willing to pick up some shares anytime it goes near my cost basis, or even hopefully it dips below my cost basis. I don't know if it'll ever happen again, but hopefully it does, which means that I can pull my average down instead of up, right? But yeah, anyways, anytime it gets close to my cost basis, I'll be picking up some shares, and I'll be buying any dips on Facebook and Microsoft because they're two absolutely beast businesses, let me tell you that. Anyways, moving on. So the next stock on my list is Hyliion. Now, I totally didn't mean for this stock to be the second biggest position in my portfolio, but hey, this stock has just absolutely skyrocketed and it is what it is, right? So I own 200 shares at a cost basis of $22.45. And I'm up almost 126% on this position, and it's been an absolute home run. So in case you don't know what Hyliion is, it's basically a company that makes electrified powertrains for Class 8 semi-trucks. So those like big freight trucks, those 18-wheelers, or I think the British call it the lorry, right? So lorries if you're British. Anyways, so if you're wondering why the ticker and name is so weird right now, it's because they're doing a merger IPO, or sometimes it's called a SPAC IPO. So what a SPAC IPO is, basically SPAC stands for a special purpose acquisition company. So a SPAC is basically like a shell company, which when you go through a SPAC IPO, you have a company that is private and it merges with the SPAC, which is already publicly traded. And then you just combine the two companies into one company and you change the ticker and the name of the SPAC to be whatever the private company was. So it's just another way for a company to do an IPO instead of directly listing on a stock exchange. You just merge with another company. So this is a very popular way to IPO your company just because it's fast. And also, it gives sort of investors an opportunity to buy into the stock before the IPO kind of fully completes, right? So if you're buying Hyliion right now, it's kind of like you're buying like sort of a pre-IPO stock. So Hyliion is merging with a SPAC called Tortoise Acquisition, and after the merger completes, the ticker will switch to HYLN. So now if you want Hyliion shares, you got to actually buy into Tortoise Acquisition, ticker symbol SHLL. So again, I don't have time to explain my full bullish thesis. I also made another video on that separately, so check out that video if you want. But yeah, I'm not going to explain my full bullish thesis, but let me just briefly touch on one thing, which is, could the stock run even higher? I mean, we're sitting at like $50 a share right now, but I think that it could actually run higher than what it is even now. So I'm going to give my reason why. So the stock went up 24% on Tuesday, and as far as I know, what caused the recent run up was just a 5-minute interview the CEO of Hyliion, Thomas Healy, did with Yahoo Finance. Now, in my opinion, he didn't really say anything that I didn't know before. I think, in my opinion, it was all like kind of common knowledge. But I think that a lot of people haven't heard of Hyliion, and maybe that's the first time that they've heard of this company in the first place, which is probably what caused the huge run up in stock price. Now, when I go on Reddit, there's actually a subreddit called SPACs. So as far as I know, Hyliion is the most talked about SPAC right now if you go on r/SPACs. But looking at the subscriber count, there's only about 16,000 subscribers right now on r/SPACs. Whereas on Wall Street Bets, there's like 1.5 million followers, or they call them degenerates, but yeah, it's followers. Kind of an interesting name. Anyways, now I haven't seen anyone talk about Hyliion on Wall Street Bets actually, so I have a feeling a lot of people don't actually know about it, and I have a feeling that when the merger actually completes and when the ticker switches over, a lot more people are going to find out about it at that moment, which could send the stock even higher. So I'm just waiting for the news of the merger successfully going through, and once it does, hopefully the stock will get a big boost, and I might consider taking some profits at that point. But for me right now, Hyliion just a hold. So that's Hyliion. And last up on the list, to the surprise of nobody, is Tesla. And Tesla is now my biggest position in my portfolio, beating out other positions like Facebook and even Hyliion, even though Hyliion stock's been absolutely skyrocketing lately. So on a split adjusted basis, my cost basis is $53.86 based on the price of the new shares, because they went through a 5-to-1 split, in case you've been living under a rock and you haven't noticed. Now I had 6 shares before, which became 30 shares after the split, and now I'm up a whopping 655% on this stock. And this is despite today's big drop, by the way, so it's just an absolute stupid amount of gains. And in regards to Tesla, what can I say? Part of me is tempted to cash out and sell some shares, but the other part of me is like, I can't cash out of this company. To me, this company is truly one of a kind, and yeah, it's just truly revolutionary in today's world. And selling shares in Tesla, I don't know, it just feels like sacrilege. So I just think of all the things that Tesla has coming for them in the future, and it's a long list, so I'm gonna have to read off of my notes here. So, you know, I think of all the things that Tesla has coming, like autonomous driving and taxi network, battery tech, solar roofs, new products like Cybertruck and Roadster. I feel like there's even more room for Tesla to grow in the future. And I think that the biggest mistake that people make over and over again is they call Tesla a car company. Hear me out, right? Tesla is not a car company. Tesla is a technology company. And don't make the mistake of calling Tesla a car company, because if you think Tesla's a car company, then you gotta compare Tesla to other car companies like Ford or GM. And if you compare them to Ford, you're gonna think that everyone who's buying Tesla shares is absolutely crazy, right? So Tesla's trading at a market cap of like 10 times what it is compared to Ford. But if you have to think of all the things that Tesla is doing, Ford is doing none of it. Or at least they're not doing things nearly as well as Tesla. So I have another story for this actually, and stop me if you heard this story before, because I think I told this story in a previous video before, but I'm gonna tell it again now. So I took this business class once back in university, and one of my professors told our whole class of the story of how one of his friends bought a brand new Ford SUV. Now at the time that his friend bought the SUV came with this feature where you can parallel park automatically, right? So all you have to do is you line it up, you press a button, and the car will automatically parallel park for you. So that was pretty revolutionary at the time. So my professor's friend tried this, and the car hit a light post. So understandably, he was kind of upset. So he took the car back to Ford, and you know, the salespeople apologized profusely and even offered to fix the car for free. But even then, the owner of the SUV, he asked for an explanation of what happened, right? So basically, the salesman was like, oh yeah, the parallel parking feature, it only works 8 out of 10 times. So let that sink in for a moment, right? So imagine if like Elon Musk got on stage, right? Imagine if Elon Musk is like, you know, we did autonomous driving, it's ready now, it's ready to roll out into production, but it'll only not crash 80% of the time. Like imagine if Elon Musk just said that, everyone would just like sell all their Tesla shares, right? Tesla shares would just like go to zero instantly, because like 80% is not good enough when you have like a vehicle safety feature, when you have a feature that involves vehicle safety, right? So hopefully Ford has improved their parallel parking feature by now, but in terms of actually fully autonomous driving, I think that Ford and all the other companies for that matter is way behind Tesla when it comes to autonomous driving. So yeah, anyways, that's my story, and that's why I'm not selling Tesla, especially not now that the stock has crashed like 10% today. So if I wasn't willing to sell at like $500 a share, I'm definitely not willing to sell at $400 a share, right? It's just common sense. So I'm definitely going to be holding on to my Tesla shares now that the price is coming down. down. So I might consider even picking up some shares if the price becomes reasonable, right? If it drops to like 300 or maybe even 250, I don't think it'll get to that stage. But if it ever does, you can bet that I'll be buying a boatload of this stock. So that's Tesla. And also one last thing I did want to mention before I let you guys go, I also have 100 shares of SLV, which is a silver trust. So it's a fund that actually owns actual silver in a vault somewhere, and they just issue kind of shares of that silver based on what's in the vault. And basically I bought silver as just sort of a hedge against currency inflation. And as I said before in other videos, it's kind of risky to hold a lot of cash, right? Just because of inflation. So, you know, buying silver is just my way of kind of diversifying my portfolio a bit. Now I have SLV, but I also have a bit of like physical silver as well. So I'm just kind of trying to spread my money around and hedging against all types of risks. So yeah, basically I'm not really in SLV to like necessarily make money or day trade or anything like that. So it just serves as more of a hedging and diversifying purpose. Anyways, that's my portfolio as of September 2020. Hope you all enjoyed the video and give a thumbs up if you did. More great things to come in the future. Be sure to subscribe if you enjoyed the series. And be sure to follow me on Twitter and Instagram, links down below in the description as always. And with that being said, I'll see you guys in the next video. Bye-bye.